Welcome. Thanks for sticking around. I think most important panels are always kept for last, so this is great. Happy to see such an engaging crowd. I was already introduced, but let me do it again. My name is Mark, Deputy Managing Director of the Dutch Private Equity Association. We have 115 members, PE and VC firms, and 100 associated members. And we are located in Amsterdam. We have a booth all the way in the back with some great visuals, so please drop by after the panel if you'd like to connect. The private equity industry has been growing quite a bit, and a larger, more effective, active private equity sector means scrutiny will follow from the media and politicians. We've had it in the Netherlands, and this session will explore what the higher profile means for the industry and how we have to position ourselves. We're going to do a deep dive into Brussels and into France. And one remark in advance, all three of us only join panels when there is a high level of diversity, but Edith had to cancel her participation, so she couldn't make it, but we all value diversity in our panels, so we'll focus on it in the future. Can I please ask you to introduce yourselves? Maybe Matti first.
Thanks, Mark. Good afternoon, everyone. So my name is Matti Leppälä, and I'm the Secretary General of Pensions Europe. And Pensions Europe is the European-level trade association for funded pensions. So we are a federation of national pension fund associations, 25 of them. The biggest are the Dutch Pension Federation and the UK Pension Lifetime Savings Association. But we cover bigger and smaller associations, and through our members, they cover 110 million people in Europe and invest 7 trillion euros of assets in European and global markets.
Okay. Alexis?
Thank you, Mark. Thank you, Mark, and good afternoon, everyone. So my name is Alexis Dupont. I'm the Managing Director of France Invest. France Invest is the professional body in France for private equity, venture capital, private debt, infrastructure, so all the private equity business somehow. We have 600 members, including 400 GPs currently, so I think we are more or less the largest market in continental Europe currently. Our members invest in a huge diversity of assets. We estimate that the total asset under management currently is around 350 billion euros.
So it's quite significant. And Matti, one question back to you. How much do your members invest in private equity, and how much was it compared to 10 years ago? Can you see it growing on the continent?
Unfortunately, we don't have any statistics on all of our members. So as I said, we cover 7 trillion euros of assets. It's both occupational pension assets, that's the great majority, but also personal pension funds are with some of our members. We have statistics on the euro area pension funds, and that's about 3 trillion euros, and that is, of course, very much concentrated in the Netherlands. And out of those statistics, of that 3 trillion, about 324 billion in the middle of 2022 were in other assets, other funds as classified, and about a third of that was in private equity, about 112 billion in private equity. So that was 3.7% of the total assets of the euro area. But of course then we have the Swiss pension funds, we have the UK, we have the Danes, we have the Swedes. So they are also, of course, very much invested in private equity. And then you have in private equity, pension system assets, like in Sweden you have the buffer fund AP6, which is dedicated to alternative assets, which is about 4.5 billion. So in addition to this 3.7% of the euro area pension fund assets, there's a lot of investments in private equity or other alternatives in Europe.
Yeah. And what would you say is the main reason for pension funds to invest in the asset class?
The main reason, I think, has been because of the low for long interest rate environment where pension funds had to increasingly seek real returns from other than fixed income and equity investments, but especially from fixed income. They increased their exposure into alternatives. And like if you take the Dutch pension fund industry, that doubled from the end of 2019 from 50 billion to 102 billion by 2022.
Wow.
So that is a major change, and of course a big part of the European private equity market is with the Dutch pension funds, and then the biggest of them, of course, make the majority of that. But it's really has been the search for yield and of course better diversification, but also of course contributing to growth and employment, and also the sustainability issues are increasingly important. So having an impact, and through private equity funds and the companies behind them, of course there are new and good opportunities to do also those things.
Yeah. And Alexis, maybe a small question to you on this. Do you see the amount of firms being increased in France? Do you see more firms joining the France Invest?
You mean GPs?
Yeah.
Yes, actually, we saw a significant dynamic in terms of growth in our membership in the past few years, driven by a variety of members, including first-time funds. So yes, there is appetite on the market to join us and also to join the profession.
Yeah, and I totally recognize this in the Netherlands as well. Our membership has been growing quite a bit, maybe also due to Brexit. We see quite some UK firms onshoring to Amsterdam. So the industry is growing. Let's focus on the next topic, the changing world. The world is changing quite rapidly. As an example, I mentioned the war in Ukraine, unfortunately. And in this changing world, reality is we still highly depend on other third countries for our solutions, like energy solutions, our microchips, our vaccines, etc. So in The Hague and Brussels, the word strategic autonomy is gaining voice. Alexis, what role do you see for private equity when it comes to strategic autonomy?
Well, first of all, strategic autonomy is a concept that is very dear to my home country, France, and who's been a strong advocate for this in Brussels for years. So, well, I think private equity can play a role in that, not necessarily in the meaning that some people have in mind for strategic autonomy, meaning defense, military expenses, and so on. That's not necessarily where we are more relevant. But I would have to say that the concept behind strategic autonomy can be a bit broader. I mean, it's difficult to foresee or to imagine strategic autonomy in a fading economy when the firms are not growing. So that's one of the issues where private equity can help make sure that the economy is thriving. It's difficult to imagine strategic autonomy when you only rely on large corporates. It's also a matter of SMEs and startups. That's another topic where we can be helpful, try to make sure that solutions come also from these firms, smaller firms. It's difficult to imagine strategic autonomy without innovation, without entrepreneurship. That's another aspect of the question where we can be very helpful on technology, on biotechnology, healthcare, and so on, something where we can be very helpful, as we've been on vaccines during COVID. And last but not least, in the next few years, it will be quite difficult to imagine autonomy, strategic autonomy, without having been able to decarbonize the economy, being free from, or a bit more free from carbon, trying to bring more renewables, and that's one of the other aspects where we can be relevant as an industry.
Yeah, very interesting, thanks. And Matti, aside from making a good return, you also want to make impact and find solutions for the challenges of tomorrow. How is investing in private equity contributing to these goals?
I think it's one of the key issues here. Of course, the sustainable finance and responsible investment and taking ESG criteria into consideration they are really key factors. And this is increasing, also the regulatory requirements are increasing, and the pension systems are very much moving towards where you have to consider the views, the opinions, the preferences of members and beneficiaries. And there, again, in the most advanced countries, meaning, again, the Netherlands and the Nordics and some other parts of Europe as well, but especially in those regions, I think this is really a strong move. And then, of course, going all the way to impact investing is important. And the private equity can contribute very much in those and in specific issues, in in ESG, meeting the ESG goals and criteria.
Yeah, and you're touching on some topics which are pretty important, ESG and ESG goals. And it's all part of the public perception and stakeholder perception. In the Netherlands, we've seen quite some scrutiny of the industry, and I was wondering how that perception is in Brussels. Could you enlighten us on what you see in your daily communications with the committee, commission, parliament, etc.?
Yes, it's of course Brussels is important for the regulatory framework, and there's a lot going on in that. There are issues like Capital Markets Union, where then one of the key issues is providing private capital to also to SMEs and to the markets to have market growth. There's a green transition in Europe, important issues. So I think if private equity is rightly positioned in these debates, it can be very helpful. Some 10 years ago, we strongly lobbied for the European Pension Fund Directive, which is called the IORP 2 now in force. And we had a lot of debates about what should be the role of private equity and other alternatives. And the Commission and Parliament were pushing for, and EIOPA, our European supervisor, were pushing for similar capital requirements as there are for insurers or banks. And we saw that this would be detrimental for pension funds as long-term investors, and we need to contribute to the growth and employment in Europe. And we argued together with Invest Europe, then the European Venture Capital Association, but also together with Business Europe and European trade unions, together from this point of view that, yes, we need to be able, as pension funds, invest in real economy and provide for growth and employment. And that was key for the acceptance of this, and we were successful. There were no harmonized frameworks and no capital requirements. But also looking at the Dutch debate, which was really relevant last year and maybe longer. Of course, the question was then in public that when the reports came out from ABG and PGGM and some others, the asset management fees grew, they doubled. And when I think with ABG was close to 3 billion that paid in fees. And then you had to explain that, yes, they were high, but the returns were more than 50% and the net returns more than 40%. And actually, then the Pension Federation, our Dutch member, explained how these investments contribute to good things in the Netherlands and elsewhere as well. And that is key, the understanding and communication of what are these investments and what is the impact. And then, of course, another question is, should you pay as much? But still, for the public acceptance, of course, transparency and knowledge of what they are and what the impact is key. If that is lacking, then this is not possible going forward. And especially the fees are not justifiable if people don't know what has been done and why.
Yeah, and 3.5 billion, as you said, was earned, but 20 billion was made for the pensioners. And this was broadly mentioned also in the Dutch media. So luckily, the debate was quite nuanced, but we need to keep communicating to society, I think. Not only trade bodies like us, but also members. So I'll also appeal to you guys in the room, please keep communicating, always. Apart from that, if there are questions during the debate, please feel free to interrupt. I mean, some pretty interesting topics like IORP or AIFMD were mentioned. If you'd like to learn some more in-depth knowledge about it, please ask us. Always feel free. But Matti, let's stick to you for a second. Is the public perception changing in Brussels? Is it or not? Is it staying the same?
I think, looking back some years and where we are now, I think it has improved a lot. But I think a lot, especially if and when we need this industry to grow and contribute well, also in the future, then I think even more efforts for transparency and good understanding of this is still needed. I think those are key.
Yeah. And are you also actively engaging with the politicians, the MPs?
Yes, we
and
are.
The media as well?
Yes, we are. At the moment, there's a revision of this pension fund directive, and these issues are not debated at the moment because Europe is strongly changing, and again because the Dutch pension system is changing from defined benefit into defined contribution. And then, of course, the solvency issues and what are the capital requirements are no longer relevant in the same way. So we are not engaging in the same debate whether we can then invest in private equity. But all in all, I think this is very relevant, and we need to see all different pieces of regulatory developments. And there are so much of financial market regulation, sustainable finance regulation, that all of this fits the framework of also pension funds, that they can invest in a good way into private assets and private equity.
Yeah. Okay. Thank you very much, Alexis. Maybe back to Paris and France. But first, what is your view on the Brussels perception on private equity? Do you see it evolving? What do you observe?
Well, I think I can concur to what Matti just said. The situation has evolved quite positively over the past 10 years. I remember a number of discussions. I was working at the regulator 10 years ago when we discussed IFMD, and all I heard about private equity was shadow banking, risky, dangerous, and so on. And I think the situation has completely changed. There is still a significant misunderstanding on what we're actually doing, but the sympathy is there. I mean, overall, the perception is a bit more positive when we talk about supporting SMEs, trying to support the transformation of the European economy. I think that we have a much more friendly reception than when we used to have 10 years ago. So that's changing and positively.
And also in France, or was it mainly about Brussels?
Mainly about Brussels. I think in France we always had the chance to have the opportunity to have quite a receptive welcome in ministries, some MPs also regarding our industry. But nevertheless, it changed positively over the past few years. I think we managed to demonstrate during COVID that we were a very useful tool for the economy, that we were here to support businesses in difficult period of times and also in the more profitable period of their business. So we were there. We managed to demonstrate that. The public sector is quite supportive of what we are doing, trying to help us channel more savings to private equity, because I think there is a good understanding that we are a piece of the solution on trying to transform the European economy and the French economy. Yeah. And the general public still lacks the understanding of what we are actually doing, but we feel that the perception is evolving positively. Just to give an example, there was this study on retail investors. Interestingly, the huge majority of respondents did not know at all or even a little bit on private equity, but those who did had a very, very positive opinion. Yeah. So we need to be more active in the field of explaining, giving relevant information, what we are actually doing to make sure this can spread.
Yeah, I totally recognize this. We had a study in the Netherlands about this too. And one of the conclusions was that the people who know more about the industry tend to be more positive about the industry. And they also thought that they, in general, knew more about the industry than the average other person. So I think we need to focus on enhancing the knowledge of the public about the industry. Do you recognize the increased profile in Paris results in extra scrutiny? So if there's topics in the media about the industry, do you see extra scrutiny in Parliament, for example, as well?
Yes, I think clearly that the scrutiny on the industry has increased. I mean, there are a number of reasons behind that. We're trying to democratize private equity, make sure that the retail investors can have access to private equity more easily. So that necessarily increases the profile and the level of scrutiny on our profession, and I mean that's okay. We need to deal with that. We need to explain more, be more relevant in the way we explain what we are achieving with our investments. I mean, currently we support the 9,000 SMEs in France.
Wow, yeah.
These SMEs have created 250,000 jobs in the past 5 years.
Yeah.
So that's something we need to repeat and explain more, because that's a very positive result and that's very factual.
Yeah. And how are you engaging with the relevant stakeholders? For example, with politicians or members of the press corps? How do you invite them for working visits, or how do you engage?
Well, we meet them every time we have the occasion to do so, because every occasion to explain what we are doing, what is the actual impact of our profession is good and need to be taken. We also try to use testimonies from actual SMEs that have been or are still supported by private equity, because they are the best advocates on what we are doing. They can explain that it changed this or that in the way they operated, that it made it possible for them to grow twice the pace their competitors. So they are our best advocates.
Yeah, and we are trade bodies, so it's in our natural instinct to communicate and etc. Do you see the same urge with your members? It's maybe a question for both. And do you see it changing?
No, I mean, our members are quite discreet, and somehow it's not their role to speak for the whole industry. It's our role. We are here also to gather data, because that's our key tool to communicate and dialogue with policymakers. Without data, we just have an opinion. It's worth any other opinion. We do have consolidated data for the whole market, and that's something we can use. Our members cannot. So they position themselves differently from what we do.
Our role is, of course, mainly to lobby for good regulation and policies, and then, of course, it's within that framework for our members, so the actual pension funds, to do their own investment decisions, which vary greatly within one country and especially across Europe. Very different takes on alternatives and private equity as part of that.
Yeah. Yeah, and in your introduction, you mentioned both geographies, the Netherlands and Brussels. And I see some differences of the perception in Brussels and the Netherlands. How would you explain those differences?
Brussels is political and European, and I think Europe is in very different stages in development and understanding and accepting this part of finance, and some are more advanced and have more experience in this, and I think it'll take time, but it's our role, of course, to argue for good pension investment outcomes, because they are essential for good pension benefits, which is the goal of our goal, that people in Europe will have good pensions, and funded pensions play an important part in that.
Yeah, yeah. I see we only have 5 minutes left. A lot of questions left. Are there questions from the room I can include to my guests? If not, if you allow me, because I have still lots of left. Why is public acceptance, and this is like obviously the main topic of the panel, why is public acceptance so important for the next decade?
Well, I can start. I think it's absolutely key. It's our license to operate. We need this public acceptation to be able to achieve what we should do and must do for the economy. I mean, support the change in terms of digitalization, decarbonization of our SMEs, of our economy. And if we manage to achieve that, we will gain public acceptance. It's really a twofold approach. So we really need to keep and maintain this license to operate. To need that, we need to explain again and again what we are doing, what we are achieving, the impact of our investments, of our strategies, and be really focused on what matters, making sure that we are still close to what the society expects from us. We need more diversity in our GPs, we need more diversity in our portfolio companies. We need to share the value we create with savers and employees in our portfolio companies. We need to be much more active in terms of climate change mitigation, biodiversity protection. So we have a lot on our plate to protect that.
Yeah.
And I would say that pensions, and especially occupational pensions, biggest part of what we represent is really an important part of the social structure of the European member states. And then when looking at then the pension investments, especially in the more developed pension fund countries with big investors, they can never step outside the society. So they're always a part of the society. It's always political, and public's acceptance is key. You know, regardless, it's not just about money. It's not products. It's a social contract, and of course it is also about money. It's also about returns. It's also about fees, but not just. So without public acceptance, pension funds cannot invest, and also it's important to note that increasingly the pension funds as investors have to consider the preferences of members and beneficiaries, not necessarily individually, but as a whole, they are more to be considered. And then of course ESG issues and all of these societal impacts, they become very relevant for the investment policies.
Okay. If we look ahead to the future, what are the opportunities of a growing sector?
Opportunities or topics to be monitored in terms of public perception. I think there are two of them. Scrutiny rising from retail participation in private equity funds. We need to be prepared for that. We need to work a lot on that. And scrutiny arising from climate accountability. So we have the means to do good things in our portfolio companies. If 5 years from now we happen not to have changed a lot for these companies, I think we will be held accountable. So we need to be very active in this field.
I mean, for pension funds as long-term investors, private assets, private equity as part of that should be an important part of their portfolio, and they should really benefit from that and from the qualities of these investments, like illiquidity premium. They should be able to benefit from that. And in all the good things for diversification, risk management, long-term investment, ESG issues, so they're all good things that can be achieved when things are done in the right way and not in the wrong way.
Yeah, totally agree. I saw Matthew approaching the stage, so that's my cue to ask the last question. Unless there's a question from the audience. I see one. I will just come to you. I've always learned that I have to keep the mic for myself. So.
Okay. So this is weird. I'm just curious to know, do you think that the importance of public acceptance of private equity is driven by the current high interest rate environment? And if that's temporary, how do we sustain the conversation about acceptance?
Thank you.
I wouldn't go that far. I think the higher interest rate environment, of course, has an impact on these investments, definitely, and makes life more difficult for the time being. But I think this increase in alternative assets and private equity has been a trend for a long time, and you know, started because of the very low interest rate environment and seeking for returns. So I'm sure the interest rate environment has an impact, but I don't think that is a key driver. That would be my answer.
And if I may, I'm the moderator, so usually I cannot answer a question, but now I'm very happy to be able to answer one. In the Netherlands, we've seen this debate for quite some years already, so it was not directly linked to the high interest rates. So I think it's something which was there in the past, and I should also say that in the future it will also be there. So the urge to keep communicating, that's what we do as NVP, but also express to our members always. And I see Alexei nodding, so I think he agrees with that. I think my time is up. Thank you for the last question. Thank you for joining, and a big hand for you guys.
Thank you.